Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, the 19th of January. Starting off with the FTSE 100, which managed to find support at basically what was late November, December support there around 7,400. The RSI went near to 30, but managed to bounce above that, and it looks like we've got an uptrend line there from back in August to underpin the recent support for this market. For the end of the week, we'd like to see the market back above the 50-day moving average around 75.50, which seems a bit optimistic, even though we have bounced well so far. In the near term, early and end of day close back below 74.10 would then suggest that we've got a new leg down to 7300 above the 50-day line, then looking for obviously a retest of the post-June resistance for this market, 77.30.40. Moving on to the DAX, where there was the hint of a recovery just because earlier in the week, especially on Wednesday, this market managed to bounce above the rising 50-day line. That's a strong continuation signal, or it can be. 16,500, the old July resistance, that's now in place again, and above that looking for 17,000, hopefully over the next week or two. Moving along to the Dow, and here we've actually had a better scenario perhaps than we were fearing, in the sense that the market bounced above 37,000, basically the old December support there. And above that, we're looking for not only 38,000 again, which is that March 2023 resistance line, but also best case scenario by the end of next month, up to 39,300. Below 37,000 risks down to December resistance, the initial one, 36,300, but hopefully we will avoid that. The other point to note is that on this recent dip, the RSI remained above neutral 50. That is a positive. Moving along to Bitcoin, and here picture is that still trying to see where this market's going to find its floor. The situation is that we've had a bit of trading either side of the 50-day moving average. That's up there at 43,000. Really want to see this market back above that, and end of day close above that. They've got a chance of retesting the January resistance around 49,000 sometime in February. Otherwise, below 40,000 risks down to the old November resistance at 38,000, but we're not expecting anything worse than that. The other negative, though, at the moment is that there's been an RSI fader at the neutral 50 level, which, tying in with that fader at the 50-day line, does give more chance to the prospect of a move down towards 38,000. Moving on to gold, which has been rather disappointing this week. We've managed to fall below the 50-day line. Now, 2024, below that, risks a move down to the floor of that rising trend channel from March last year at 1980. And the next signal really on the upside would be either the RSI pushing back above neutral 50 versus 45 at the moment, or an end of day close above 2024 to take us back to 2050. Onto the stocks, and the cupboard still relatively bare, which is obviously not great. Here we've got Anglesey mining, and nice gap up here after the bear trap from below May support that we had at the end of November. Looking for 2.1, 2.2 pence by the end of next month at the top of that broadening triangle from back in May, and the upside valid while we hold above the 200-day moving average area at 1.6 pence. CleanTech Lithium has been in the wars of late, but it looks as though we've got first signs of a turnaround. The reason for saying that is the bullish divergence there in the RSI window, so lower lows for January, but the RSI basically at the same level as it was back in November, and then just looking for this market to break out of that falling wedge from November at 17 pence. Above that, we're looking for the 50-day moving average through 21 pence, hopefully over the next few weeks. But the key here, breaking 17 pence. Corcel is next, and here it looks like job done in terms of the technicals. Above a penny, we were looking for 1.3 or 1.4, and that's just what we got over the last 24 hours or so. We could still see further movement, but not really looking for higher than 1.4 at the moment, just given how far we've travelled. The old peak, or the initial January peak, around 1.15, so we want to see the shares remain above that on an end of day close basis to maintain the latest stellar rally that we've had from the middle of last month. Very popular stock coming up next in the form of Fusion Antibody, and it rather mirrored what we saw in Emerson the other week, where we just have day upon day of bullish candles, or at least blue candles, and that's what we had here since basically the beginning of last week. Yesterday gave us a gap close buy signal above 5.7 pence, and above that we were looking for as much as 9 pence the last time we looked at the stock. Obviously the old peak there from November, 9.4 pence. If you're a fan of the shares and looking for greater glory, then that might come in the form of the line I'm about to draw at the moment, which is an old one there from back in May last year. So up to 20 pence if we can hold above the 9 pence region. We've got the initial resistance there after 9 pence will be the 200-day line at 10.6 pence. So above that, then looking for 20. So it's basically 9, 10.6, and then 20 as the best case scenario target there if we reverse what we saw on the stock back in May. At this stage, only back below resistance on the way down around the 7 pence level, really delaying the upside scenario. Moving along to a stock which is not quite as dramatic as Fab at the moment, Greatland Gold. Here you can see that perhaps a rather disappointing retracement from the 11 pence zone right down to 7.25, but we managed to recover the 200-day line at 7.75 yesterday, and above that I think there's a reasonable chance at least of a pushback towards the 50-day moving average at 9.3 pence over the next couple of weeks. Obviously we want to see the shares not make any low below 7.25 in the meantime. Moving along to a stock which I haven't looked at for ages, and you'll probably see from the chart why. Harvest Minerals here, the shares gapping down at regular intervals, but we have broken that line of resistance there from October, and the 50-day moving average at 0.87. Above that, looking for 1.45 as soon as the end of next month within a broadening triangle base. Hemogenyx is next, and it's, I suppose, keeping an eye on the Fed at the moment, but here we've had that rising trend channel from March last year, top of the channel there, heading towards 3.2 pence, which hopefully will be achieved by the end of next month or even sooner. Our other target there was obviously the gap down that we had back last January around 3 pence. So it's 3 pence, 3.2, and then ideally up to maybe 4.2 pence by the end of next month as a best case scenario. But the key here is holding above the initial January resistance at 2.5 pence. On to the last three. First one is Oroile, which has behaved itself very well over recent weeks and months. The bear trap gap reversal, in fact a double gap to the upside there back in November, and then another one at the end of last month, and we've had two so far this month, so really flying in terms of the re-rate. Above the initial target there, or the second target there at 0.24, looking for 0.32 by the end of next month or even sooner. And just to have a bit of a boost for the situation, if you're a fan of the shares and looking for greater glory, the best case scenario here maybe over the next couple of months is up to 0.47, the upper parallel of the 2022 resistance line target. On to Panthera, where we've been going with the mantra of the range being between 5 pence and 11. We've bounced off 5 pence now, so looking for at least an initial move up towards the 7 pence area, which is post-October resistance for the shares. Hopefully we'll see that by the end of next month. It's quite exciting in terms of the moves and the popularity of uranium at the moment, and Thor Energy reflecting that bear trap gap reversal through a rising 50-day moving average, but now through the 200-day line at 2.1 pence. Above that, looking for 3 pence by the end of next month at the top of a broadening triangle base on the daily chart since June. That's it for me today. More updates over the weekend.